Anthony Grasso here, bringing you financial news that you can use. In this series of videos, I'm going to look at stocks to invest in to recession-proof your portfolio. In this particular video, I'm going to do a stock analysis on CyberArk. Is this identity cybersecurity firm worth investing in right now? Well, let's find out together. I'm going to do a summary of the company, of product offerings, recent headline news, financials, analyst projections, and then finally I'm going to give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell for your daily stock reviews and recommendations from an unbiased source. So let's get right into it. And as always, folks, this video is brought to you by Webull, which is an online brokerage and trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. And if you sign up today and deposit any amount in the account, you can get up to 12 free stocks by using my referral link in the description down below. All right, so CyberArk is a software, together with its subsidiaries, develops, markets, and sales software-based security solutions and services in the United States, Europe, Middle East, Africa, and internationally. Its solution includes privileged access manager that offers risk-based credential security and session management to protect against attacks involving privileged access. Now, vendor privileged access manager combines privileged access manager and remote access to provide fast, easy, and secure privileged access to third-party vendors. Now, the endpoint privilege manager, which is a SaaS solution that secures privileges on the endpoint, and it has the cloud entitlements manager. It's a SaaS solution which reduces risk that arises from excessive privileges by implementing least privilege across cloud environments. Now, the company also offers robust identity and access management as a service, such as workforce identity, which offers adaptive multi-factor authentication, single sign-on, secure web sessions, application gateway, identity lifecycle management, and directory services and consumer customer identity services that provides authentication and authorization services, MFA, directory, and user management to enable organizations to provide their customers with easy and secure access to websites and applications. In addition, it offers secrets manager credential providers to provide and manage the credentials used by third-party solutions, and secrets manager conjurer, which for cloud native applications. Now, the company provides its products to financial services, manufacturing, insurance, healthcare, energy and utilities, transportation, retail, technology, and telecommunication industries, and government agencies through direct sales force, as well as distributors, systems integrators, value-added resellers, and managed security service providers. It was founded in 1999 and is headquartered in Israel. So let's look at some of the news of the company right now. So CyberArk recently announced the Q2 2022 earnings report. Now, here are some of the details. Now, they beat their second quarter net new ARR and raised the fiscal year 22 guidance, which has not been the norm this quarter in security earnings in general. So that's good. They definitely beat the earnings report. All right, in other news, CyberArk recently just announced that they acquired C3M, which is a specialist in cloud security, for an undisclosed sum. Now, the acquisition allows MSSP and MSP partners to find and fix cloud security misconfigurations across the AWS, Google Cloud, and Microsoft Azure. Now, the founder and former CEO of C3M and vice president of cloud security at CyberArk explained the inspiration behind the acquisition. He said, joining with CyberArk is the next phase of the journey at C3M. They are extremely proud of the company they've built. He said, we set out to build the world's most comprehensive cloud security platform, and now as part of the world leading R&D organization that's shaping the future of identity security, I'm confident that we will do just that. I could not be more excited about what's to come. He also explained that C3M talent and technologies will bolster specific analysis and monitoring capabilities to empower organizations to intelligently secure privileged access in the cloud. Bring in C3M's automated threat detection and incident capabilities for identity related compliance violations and misconfigured cloud resources, coupled with the behavioral baselining and risk scoring for all identities, will further strengthen CyberArk's intelligence and analytics offerings. That sounds extremely lucrative and definitely good for them. Now let's switch it up a little bit and look at some of the fundamentals of this company right now, because that's what we're here for. So the stock is currently trading at $147.08 a share, with a market capitalization of around $6 billion. Now the company is projected to have about $597 million revenue for 2022, with earnings of negative $135 million. Yes, they're definitely net profitable at the moment. Now the revenues are projected to increase over the next few years to around $914 million, almost doubling that by the end of 2024, but the earnings are projected to still be negative, but getting better at a negative $67 million. Now let's look at the specific valuation key measures of this company. So let's look at the valuation for first. The most appropriate valuation measure for CyberArk is the price to sales ratio, because the price to book ratio is excluded because it most likely underestimates the company's book value by overlooking hidden assets such as intellectual property, while the PE, the price to earnings, and the price to earnings growth ratios, PEG, are not even meaningful right now. Therefore, CyberArk seems highly valued with a price to sales ratio of 11.78 times, which is one of the highest in the software industry. But if you look at the price of sale versus its peers, CyberArk is good value based on its price to sell ratio of 11 times compared to the peer average of 11.6 times. Now, if we look at the share price versus the fair value, the fair price of CyberArk when looking at its future cash flows, for this estimate, you can use the discounted cash flow model, and we see that it is trading below the estimate of fair value, but the fair value about $225 a share, which is significantly more than $147. Now, let's look at the profitability of this company. It appears to be an inefficient company. While its profitability is among the best on the gross margin basis, its bottom line, the net margin, is only in line with a software industry median. And doesn't pay any dividends, so don't have to worry about that. However, the average its peers also don't pay dividends as well, like most of its peers. So let's look at the growth of this company right now. So CyberArk saw earnings decline in spite of positive revenue growth during the past 12 months. Additionally, the average company in the software industry was able to improve its earnings result over the same period. CyberArk is forecast to remain unprofitable over the next 3 years, but it's definitely on the incline, less negative over the next 3 years. And very important because they're not making that much money. Let's look at the financial strength. Now, the debt to total capital ratio of 45.85% is in line with the software industry's norm, despite its increase over the last year. CyberArk short-term assets of $1.1 billion exceed both its short-term liabilities, which are $375 million, and definitely its long-term liabilities of $692 million. They have more cash than total debt, which is a good thing. But there is a negative note. Shareholders have been diluted in the past year, with the total shares outstanding growing by about 2.4%. Now let's switch the gears to look at what do the analysts say right now regarding CyberArk. Well, the analysts currently have a buy and strong buy recommendation on CyberArk, with the average price target over the next 12 months be $178 a share, with a high estimate of $200 and a low estimate of $145. Now, when I look at the analysts specifically, a lot of analysts are saying it's a buy. But when we look at specifically some analyst reports from the Street Quant Ratings and specifically the CFRA report, they have a sell recommendation on it, and I'll go over that briefly with you. So the Street Ratings sell recommendation is driven by some concerns, they say, which they believe should have a greater impact than any of the strengths, and could make it more difficult for investors to achieve positive results compared to most of the stocks that they cover. Now, the company's weaknesses can be seen in multiple of areas, such as the deteriorating net income, disappointing return on equity, weak operating cash flow, and feeble growth in its earnings per share. Now, the CFRA report over here, they have a sell recommendation based on its score from the quantitative model for the United States. Now, growth and valuation model subcategories are the two largest drivers for the sell recommendation. Now, the growth includes factors that measure earnings per share growth, and stability and cash flow growth and stability. Valuation includes factors such as price to earnings, price to EBITDA, and price to cash flow. Now, the overall ranking that the CFRA report said, it was in the 74th percentile of all the stocks that they cover in their realm. So basically, let me bring it back over here. So some of the analysts are a buy, individual analysts, but when you look at the reports that come out of the street ratings, CFRA, they have sell recommendations. So based on all that information, am I a buy, hold, or sell recommendation on CyberArk? Sorry. Here are my thoughts regarding that. We have seen, what we have seen is when technology advances, this often involves software-driven electronic equipment, which in turn opens the door to potential for misuse and unauthorized use. There will always be a demand for protections against such abuses. Now, yes, there are a lot of competitors in this field, but the demand continues to grow faster in both volume and complexity. We can see this with information handling progress in investment transactions, which has led to the elimination of trade commissions, dramatically changing this industry. Now, and I'm going to say this again that I said on another cybersecurity video, since the pandemic hit, companies around the world have been focusing on digital transformation. Now, although the digital transformation was already picking up earlier than the start of the pandemic accelerated the enterprise's adoption of digital solutions to stay relevant in a highly competitive business environment. Now, the rapid adoption of digital technologies enabled the implementation of newer and disruptive business models and processes, but it also necessitated the need for enhanced cybersecurity solutions as cyber attacks, identity, and security breaches become prevalent within digitization. Now, with the surge of investments towards digital transformation, cybersecurity companies are expected to play a significant role in helping enterprises manage their digital risk. Now, given its highly critical need, expenditure on digital security has become indispensable, irrespective of the need to control costs amid an economic downturn. This makes cybersecurity industry almost recession-proof. Now, with CyberArk in general, there is a high importance with identity solutions, increased awareness and demand for developer-centric security solutions, favoring new products recently launched by CyberArk and a seasoned management team with deep experience in cybersecurity. Now, the re-rating reflected from some analysts from a sell to a buy. It means that the CyberArk's leading position in the PAM market, broader growth prospect that it has to expand its identity platform, and revenue acceleration due to the model transition to subscription-based approach. Instead of selling the software, you're going to subscribe to the software, so you have the clients will continually pay you money. And I believe more in the subscription-based model, especially for this type of solution. Yes, they're not profitable right now and do not plan to be profitable over the next few years, but the projections are good, and I do believe they will get there eventually. I would say 3 to 5 years they will break that break that negative earnings per share. But I view identity as a top priority within the security for 2022 and in the long term, shifting to cloud and trust architectures. So based on all of that, I am a long-term buy recommendation on CyberArk with a 12-month price target of around $180 a share. Now, this is a slightly more risky for the risky investor out there that wants to roll the dice, but not too much. Their projections are pretty good, but it just might pay off in the end. I give it a buy and hold for about a 5-year time frame to see the most out of this stock. I view this company as good value with a mediocre balance sheet. So there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell for your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.